The economy is picking up again, faster than expected. It is time to start investing. What's up everyone, my name is Joris, welcome back to my finance channel. The Belgian economy is recovering faster than anyone has expected. The USO, the European Economic Think Tank, is optimistic about European future economic growth. The never-seen stimulus of the United States and the fast-moving vaccination programs are boosting the world economy optimism. And for now, only inflation and the slow vaccination speed in poorer countries might pose a threat to our world's economy. But we'll get to that later. The USO explains they expect a faster than previously calculated recovery of the world economy. In Europe, they now expect a 4.3% growth for 2021, compared to the 3.8% they projected back in March. The United Kingdom is also expected to grow 7.2% in 2021, from the 5.1% earlier. In other places in the world, the same picture is projected. China, for example, is expected to grow 8.5% over 2021 and the USA 6.9%. All those better than projected expectations are great, but they don't paint the whole picture. The major part of the world, Europe and especially the third world countries, have now a growing economy again, but they are still lagging behind. The USA and China in particular already completely recovered the economic pit of 2020 that was left behind in the wake of the pandemic. Their current economic level is already higher compared to pre-pandemic levels, while Europe will hopefully pass this point later this year. Poorer countries, however, might have to wait until 2025 to see the pre-pandemic economical levels again. All things considered, the world economy is still expected to grow 5.8% in 2021 and 4.4% in 2022. A rise in economy also causes job creation to rise. In Belgium, vacant jobs rose with 7,200 in the first quarter of 2021. Belgium is not yet out of the economic dip. We are still 4% lower than pre-pandemic levels, with 5,800 less vacant jobs compared to pre-pandemic periods. But still, we are on the right track to full recovery. The adjusted economic growth percentages stem mostly from the worldwide vaccination programs, which are running very well at the moment. As of today, around 2 billion vaccination doses have been administered worldwide. Especially the richer countries can show us very high vaccination rates. This is very supportive for the global economy. And apart from that, President Biden of the United States has also announced a staggering $6 trillion support program to support the American economy. In short, Biden's support plan consists of 3 plans. One of them is already approved and the other 2 are still pending. Biden's first plan, the American Rescue Plan, worth $1.9 trillion, consists of handing out one-time direct payments to millions of Americans. It also tries to support states, local governments, territories and more with emergency fundings. Around $21 billion is also reserved to reduce long-term poverty, for example for federally subsidized housing. Biden's second plan, the American Jobs Plan, is worth $2.3 trillion for transportation projects like bridges, roads, mass transit, airports and more. It would spend money to improve drinking water and the renovation of affordable housing, public housing capital and building and upgrading public schools. More money is still reserved for small businesses and investments in clean energy. This plan would be financed by raising corporate tax rates from 21 to 28%. Biden's third and final proposed plan is the American Families Plan, worth $1.8 trillion. Details about this specific plan are still pretty vague. A major part of the money is reserved to subsidize childcare and for paid family and medical leave programs. The American economy will be greatly affected by these stimulus plans, and by pouring this much money into the American economy, a lot of it will trickle down to the world economy, to the rest of the world. And that will also support the worldwide economy. As it stands today, there are really just 2 subjects that can cause troubles in the expected economic growth. The first one being the vaccination programs. And this one is a big one. So even though the programs are going very well in the richer countries, as long as the poorer countries are not well vaccinated, if they cannot keep up, the whole world will be prone to new varieties of the virus. It's simply not enough to vaccinate the rich countries and forget about all the rest. All will be in vain if a major part of the world is forgotten. As long as not everyone is vaccinated, our social lives will be limited. People will have less work, unemployment will remain high, so it is in our best interest that the vaccination programs in the rich countries are completed swiftly, and the poorer countries that can't finance their own programs are supported or helped by the richer countries. Unless everyone is protected, no one is protected. Another potential cause of trouble is the inflation. There are a lot of talks and a lot of panic about expected inflation. As we all know, inflation makes prices go up over time. But according to most economists, these rises in prices at this moment are temporary. Mostly because of commodity prices in the recent months. Stefan Kroiskamp has published a study about inflation in his recent outlook. According to him, we can expect inflation in 2021 because of the uncertainties in the markets. Most companies are hesitant to invest a lot, and on the other hand, commodity prices are going up a lot. In the medium term, inflation will be kept in check by the support of the central banks, the currently high employment rates and capacity underutilization. In the long term, however, when the capacity reaches its full capacity, we will have to look at the unemployment rates. Since in most developed countries we have an aging population, every year the percentage of active workforce is shrinking, and this shortage will lead to inflation pressure. Stefan's global outlook is mainly focused on the central banks, and those banks will have to keep a very close eye to the economy and support it whenever and wherever it was needed. But they also have to be very cautious with their statements, because the markets at the moment are very restless. As a result, the stock market might become rather volatile, might be very unwary this year, and volatility might rise on the short term. We have to keep a close eye on that. Both the stock market and the real estate market enjoy higher inflation. Typically, rising inflation expectations correlate with improved economic growth and an increase in normal interest rates. Therefore, investors shift towards companies that particularly stand out to benefit from the recovery, as we have seen in the previous months with the commodities. But the same is true for the real estate markets. Property rents tend to track inflation over the long term. And should real interest rates remain exponentially low, this in turn is seen as positive for relative pricing. The European Central Bank doesn't expect inflation to stay high over the next few years, so the real interest rates will stay low, or even negative as they are right now. So if you just stay the course, there should be no problem. If you've enjoyed this video, please leave a like for the YouTube algorithm and support the channel by subscribing and hitting the notification bell to be alerted when a new video comes out. I thank you very much for watching, and I hope to see you in the next video. Cheers!